Have you ever looked at a company and just wondered, how does it really work? I mean, beyond what they sell, how does the money actually flow? Where do the profits really come from? Well, today we're going to do exactly that. We're going to become financial detectives and just peel back the layers on the earnings report for a company called Ador Welding. Okay, let's dive in. So get this, in just 6 months, from April to September 2019, Ador Welding pulled in a whopping 2.58 billion rupees in revenue. Now that is a huge number, right? The kind that gets headlines. It tells you they are selling a ton of something, but what it doesn't tell you is the real story behind that number. And that's the big question we're tackling. Is this company just one giant single machine churning out money, or is there something more complex going on under the hood? Let's find out. Well, it turns out, Ador Welding isn't just one single business. It's probably better to think of it as being powered by two totally different, separate engines. And each one has its own job, its own performance, and, as you're about to see, its own story. Okay, so the first thing that just jumps right out at you is the massive difference in scale here. On one side, you've got the consumables division. It's bringing in over 2 billion rupees. And then on the other side, you have the equipments and projects division at just over $500 million. I mean, that means the consumables engine is raking in nearly 4 times the cash. So, simple, right? The bigger revenue stream is obviously the more important part of the business. You just follow the money. That's got to be the whole story. But is it really? Nope, not even close. You know, revenue is just the money that comes in the front door. Profit is what's left after you've paid all the bills. And this, right here, is where the story gets really, really interesting. So now we're going to move past that top line, the revenue, and get down to the bottom line, the profit. This is where we find out what's really going on inside Ador Welding. So to really understand this, let's think of the two divisions like this. The consumables business, that's the steady workhorse. It's reliable, it's consistent, it just keeps chugging along day in and day out. But the equipments and projects side, that's more of a high-stakes bet. We're talking bigger, more complex projects that, yeah, could have a huge payoff, but they also carry a lot more risk. And wow, the numbers really show just how different these two bets are. Over those same 6 months, our steady workhorse, the consumables division, cranked out a really solid 342 million rupees in profit. But the high-stakes bet, that equipments and projects division, it actually lost 108 million rupees. It's in the red. And this right here is the absolute heart of the story. The profitable workhorse isn't just paying for itself, its profits are being used to cover the losses of the entire other half of the company. It's a classic business dynamic, and it's playing out right here in these numbers. Okay, so we know one part is making money and the other is losing it, but to really get the full picture, we've got to look at the company's expenses as a whole. After all that revenue comes in, where is it all going? So of the nearly 2.5 billion rupees in costs, the single biggest slice of the pie, not surprisingly for a manufacturing company, is the cost of materials. A huge 74% of all their spending goes into just buying the raw stuff they need to make their products. After that, you've got much smaller slices for things like employee salaries and other day-to-day costs. All right, so we've seen the money coming in, we've seen the expenses going out, and we know about this internal tug-of-war between the two divisions. And all of this leads us to the final, most important question of all. When the dust settles, is there anything actually left for the company and its owners? This is the moment of truth. This is what it all boils down to. We take the total income, we subtract the total expenses, and we finally see what the company has actually earned. This is the number that every single investor is watching. And there it is. After everything is said and done, after the profitable division covered for the one that lost money, and after every single bill was paid, Ador Welding was left with a net profit of 145.5 million rupees for that 6-month period. So, what does that actually mean for an investor? Well, to answer that, we look at something called earnings per share, or EPS. Now, it sounds kind of technical, but it's actually really simple. You just take that final profit number we saw and you divide it by the total number of company shares out there in the world. It is the ultimate measure of how much profit was made for each individual share. And for Ador Welding, that number came out to 10 rupees and 70 paise. This one number boils down all of that complexity we just went through. The revenue, the two divisions, the profits, the losses, the expenses.
It boils it all down into one single figure that tells an investor exactly what their little piece of the company earned.
So let's just take a step back and recap the story we've uncovered. Ador Welding is really a tale of two completely different businesses. You got the consumables engine, which is the star player. It brings in most of the cash and, most importantly, all of the profit. And it's so strong that it's literally carrying the entire equipments and projects division, which right now is losing money. And that leaves us with one last big strategic question to think about. Is this a brilliant move where a stable business is funding a riskier, high-growth bet that could pay off big time down the road? Or is it just a drain where a really strong business is being held back by a weaker one? The numbers tell us what's happening, but the answer to why, well, that's the real art of business strategy.